You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Good to be back, Jim.
We were talking about how people were wondering, what can I do with my precious metals portfolio to try to strengthen it up in a time when nobody seems to want to buy shares in gold mining companies? How can you start working on your portfolio to put it back to health?
Well, I think all of us have been ground down quite a bit, some more than others, over the last 2 years, and certainly since April when gold and silver fell off a cliff. And it can be very difficult to do something now. Maybe you're all in and you have a bunch of losers. Maybe you have a fair amount of cash that you want to deploy, but you don't want to just throw it into a situation where it keeps going down and down. And my suggestion is to consider a tool that can help you rebuild your portfolio, and if the trend turns, which it seems to be turning in the terms of the larger sector, you can get back up in the game again and do things productively. And that tool is the Exchange Traded Fund, or ETF. There are literally thousands of these funds now, and there are scores of them that relate to the resource sector themselves, which is what we're focusing on. The entire universe of exchange-traded funds and ETNs and all that are called exchange-traded products, ETPs. But we'll talk today about ETFs related specifically to mining stocks and gold and silver.
So, again, we've been focusing so much on gold and silver. Perhaps we're missing out in another area in precious metals. It seems to be gaining a little more strength than gold and silver right now.
And that would be the PGMs, which you and I have discussed on this show for over a year now. I think we were among the first to talk about the fact that even though the supply-demand didn't look very good in terms of higher prices, that there were things underneath the hood there that indicated that this was not going to be the case much longer. And, of course, one of the really big things has been the blow-up of the labor relations in South Africa, the cost there, which many of the platinum and palladium group miners are producing at hundreds of dollars below cost. Some of the mines are being shut down. And so that's going to be, I believe that platinum and palladium, or PGMs, are going to lead the charge forward as we go into the bull market, and they will lead gold and silver, and that's why I'm putting some money there first to kind of bulk up my profits while I wait for gold and silver to make their secular turns.
You always told us we should keep an eye out for the political situation in an area where we plan to invest. And Kyrgyzstan in Central Asia, a small country most of us probably have never even heard of, well, they have a huge gold mine run by Centerra Gold of Canada. And right now there are riots. People are barricading the mine. They've cut off the power. And, they're trying to take over this thing physically. The government there says we have no plans to nationalize Centerra Gold's holdings there. But every day, people are laying down on the road. They won't let traffic in or out. They're having to use tear gas to control the crowds to keep them from rushing the mine. And this mine is vital to this country. It produces 12% of their gross national product. First of all, could the people there kill the goose that laid the golden egg if they keep attacking this gold mine?
Definitely, and this is symptomatic of the country risk that we've often discussed. Yesterday morning there was a shop steward that was shot dead at the Loneman mine in South Africa, the platinum producer. And so you're going to see more of that going on as these systemic issues don't get resolved anytime soon. The ETFs, I'd like to get back to that because that's our focus here today. The ETFs offer you a basket of mining stocks. Now, you can also buy ETFs that have to do with the metal itself. You can buy gold and silver ETFs. For example, you can buy some that are actually leveraged, so move faster than the underlying price of the metal. AGQ is an example that moves twice as fast up or down as the price of silver. Another one I think is called DGB, which is an ETN out of England, which you can trade in the U.S. That one moves, I believe, twice as fast as gold up or down. So I would like to focus today primarily on the mining stocks themselves, like GDX, GDXJ, which are the exploration stocks, and GLD. And there's a fairly new one, and people need to watch this one because it doesn't have much volume yet. It's called GGGG, 4 Gs. And I believe that it invests only in companies that derive 90% or more of their income from gold production. So that's even more of a pure production play. It has a lot of the bigger miners in it. That might be one to watch. Again, the volume looked to me pretty thin right now, but you can still trade it. But this is a way, if you don't have the time or the expertise or the money to throw at a bunch of different stocks individually, go in and buy a basket, and usually the basket will be okay for you when the major turn comes, which it looks like it's trying to do now. And for example, the mine you mentioned this morning, if you or I had shares in that company, probably we'd be down 20% today because of what happened. But if that company was one of, say, 10 or 15 or 20 within the context of a basket of stocks in an ETF, it probably wouldn't have made much difference. So that helps to lessen or ameliorate our specific company risk while we're waiting for the big turn that tries to lift all boats, which eventually will happen.
The 4Gs, I was just thinking, it must stand for good golly, get gold.
I don't know, but that's as good as any, if you ask me.
David, is there anything else that you can maybe tell people? There is light at the end of the tunnel. There will be a big upswing in the precious metals market. Any little rumblings that you've heard in the background?
Well, if you look at some of the charts, we've got some of the stronger miners that look like they're trying to put in bottoms, and those may be taken out. But the point is, we're seeing fairly significant indications through the ETFs and through the price of the metal itself, which is being harder and harder to be knocked down. We're seeing an indication that a bottoming process is taking place. Now, a bottoming process is different than the bottom. We don't know if it's the bottom. You could build a case, and I'd say there's a 50-50 chance that we'll see lower gold prices through this bottom that we have here around 1320 or so before we see a sustained uptrend. That may not happen. The bottom may be in now. And the thing is, if we try to guess and we just stand on the sidelines with 100% cash, if it is the bottom, then we may never get back in. And if we go all in now and it's not the bottom, then we struggle. So that's why, position size, trading smaller than you think is rational is a good thing to do. It's an opportunity on strength, like we saw yesterday, to get rid of some of your dogs, even if you've lost most of your money on that position, and put it into something that you feel will turn around more quickly when the turn finally comes. I think it'll be something along the lines of 2008 and 2009, and whether that plays itself out later this summer into the fall or even next spring, it's going to happen. It's going to be violent, and it's going to catch most people, including probably us, by surprise.
Well, when we were at the Cambridge House Resource Conference just a week ago, it was very quiet there, and we'd gone to a resource conference just a few months before that where everybody was just hopping around and super optimistic. So it does seem to be like there's, some kind of a pall over the resource industry where people are saying, okay, no one wants to invest in us, we're going to give up, or just go quiet for a while and let everybody play around with the equity markets. Is there a danger that people are losing focus on what could work for them over the long term?
Totally, because they're reacting from emotion. You've got to do the opposite of your emotions. When everything looks bleak, that's when you want to be buying quality companies. You've got to do your research. You've got time to do it. It's fairly quiet. And those, like you mentioned, the attendance being down, that's always a contrary indicator. It doesn't mean that the bottom is tomorrow, but it means that the bottoming process is in play. We may or may not have seen the bottom. And when it turns around, it can be very powerful. And so even if that first turnaround goes up and then stalls and goes back down and does a retest, which is very common when you've seen a big drop like this, the bottoming process is taking place, and some of those stronger stocks will not necessarily make a new low even if the metal does, and that will be a further indication to us. So a person either believes that the long-term trend is intact, which I do, or they don't. And if they don't, they were going to act totally differently than the way you and I are talking this morning. Just coming back before we close today, I want to mention on the platinum palladium ETFs, you can buy ETFs or ETPs. For example, the Sprott Group has one, I believe it's SPPP, and they invest in platinum and palladium. They buy two times as much on a dollar basis of palladium as platinum. Again, by buying the metal ETF, you're not struggling with which company to buy in case they're not doing too well. There's also a leverage one, and I don't know if that trades in the U.S. It trades on the British listed, and this is a 2X palladium ETF, and that is called PHPD. I'm going to look into that myself. I don't know if we could trade it on the American Exchange. Some of these you can, and some not. But the universe out there is very large. All you have to do is Google, palladium ETFs or platinum ETFs or precious metals ETFs, and you can get all sorts of free information so that you can make an informed decision to decide or not to get involved in these ETFs.
And don't forget how Warren Buffett became a billionaire. He was snapping up shares like we've been talking about while they're at record lows or near lows.
That's right. You have to buy it when they're on sale. And you don't pay attention to the big names that are doing the opposite. For example, George Soros is selling or whatever. Do you really think that he is going to call you and me or send out a little newsgram exactly when he's doing some particular thing? Usually when it comes out that he did something, he did it months ago. So you got to trust your own devices, and you got to trust people, again, like David Morgan and Eric Sprott and John Embry and Jim Sinclair. These are the people that have track records, and so you don't follow them like gurus, but you pay attention to what they say and do, and you ask yourself, does it make sense for me in my circumstances? And if it does, then you act.
Thank you very much for chatting with us, David.
Very good, Jim. Look forward to speaking to you again.
My guest has been David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet, and you can contact us at info@HowStreet.com. I'm Jim Goddard.